All right, good evening, guys. Tortoise Nightly Strategy Podcast for August 5th, 2022. We'll start with the market health check. I thought the potential for a large tactical move today before the weekend was large. Let's see what we got. So out of this little doji yesterday comes a one of the larger gap downs we've had, but then opens and then strong move to finish almost flat for the day compared to yesterday. A fractional loss, closed near the top. So this was really a tactical skirmish with reasonable, normal daily range. The 5-day, nothing special. The 5-day range remains small. The 10-day range is normal. And this was, it felt like the market in a holding pattern. No real burning urgency to get another leg up before the weekend, but content to hold on these two legs that were up. And no real serious run at the bottom except for that tiny little gap, which was immediately reversed. The PSAR continues to point straight up. It's already across the Bollinger Band mean. The dragon is riding the edge of the Z1, and price is comfortably in between Z2 and Z1, but closer to the top. We're still testing these two important support levels. One was the top of the dragon, one was the top of the RL30 a while ago. So this was, I take this as a positive sign, failure to fail, and content to just hold it for the weekend. That's how I'm reading it. No real appetite for additional risk in the face of warships in the Taiwan Straits and missiles everywhere, and missiles landing in Israel too. The president with monkeypox, Cheney coming out and slinging arrows at Trump. So situation normal in domestic politics. This just looked like a pretty good end to a slightly up and calm week, and I think everybody's happy to see that. All right, individual stocks and sectors up next. All right, we had the S&P was just below the zero line here. That's the gains and that's the losses. So the S&P was basically flat at 0.17. The Qs were down 0.82. So much for the leadership. And Treasuries gave back 2.38, and Tesla 6.6. To the upside, diamonds and emerging markets were slightly better at 0.1 and 0.2, and the Russell had the most risk appetite at a positive 0.77. So about a 1.5% divergence between the best stock index and the worst. The one-day anomaly in Treasuries resolved to the downside, and then Tesla just got smoked today, closing under 900 at 864. So that was kind of a blow to what had been a pretty good tactical run. We'll look at the markets that underperformed, starting with the sectors. So ARC, Staples, and Tech were down 0.2 and 0.23. So S&P Tech was a lot better than the Qs. That's one of the few times you'll see that large of a divergence, minus 0.23 and minus 0.8. So this is old school tech. Apple and Microsoft were not much farther behind. Then a cluster of Blended commodities, agriculture, lumber, Mexico between 0.36 and 1.0. Discretionary was off 1.7 based on weakness in Tesla. The FANGs and Squarespace off 2%. Individual companies that did poorly, Tesla and Robinhood off 4.4 and 6.6. PayPal 1.7, Rivian, and as noted, Apple and Microsoft. So fairly narrow range of underperformers here, and not really runaway pain with the exception of Tesla. All right, to the upside, what had the strength today? Excuse me. Whoops. All right, so there's the S&P again, minus 0.17. So wheat and precious and oil basically flat. Then the first cluster here of real estate, global future of finance, materials, clean energy, commercial real estate, and finance between 0.3 and 0.7. Then blockchain, VIX, and lithium between 0.8 and 1. Starting to see real strength now here in blended large cap crypto, Brazil, ARC Genomics, and energy between 1.5 and 2%. Bitcoin and oil exploration 2.5 and 3. Marijuana 3.5. And then the winners for the day: Ethereum 6.2, Coinbase with another big range day 4.5. S&P Bio at 4%. Individual companies that won, our favorites: Devon Energy 4%. And then all three of the metals just crushed it today. U.S. Steel 1.25, Cliff 2.1, and Alcoa the best move at 3.5. So looking for more of that on Monday. I'm going to go through the sniper trades first and the individual traders first, and then come to the reports, because that's kind of the weekend. We want to get closure on the week ahead, or the week that just was, before we look at the week ahead. All right, so this was Coinbase. This one was tough in the morning. This little cluster, there was a lot happening, and I was determined to ride out the storm here. And so, following along at home, here was your open right where it closed, and then it broke north of the descending PSAR. So I went ahead and bought it with a risk box down here. It started failing immediately, so I took a 0.2 loss. I missed the short. It bottomed all the way down here, came back through the PSAR, moved another risk box off the bottom, and when it broke above the high of the day, I went ahead and bought it with the standard risk. I just couldn't act inside there. And then this thing ran all the way up, and then I watched it coming all the way down, so I tried to get half bad fill, so collected about half an hour. Then it fell out of the bottom. Again, this time I was prepared for the collapsing dragon, and that scratched immediately. So there was a lot of activity inside Coinbase that had my attention. No place for a nervous person. I then decided to let the smoke clear and just wait for it to get out of this entire intersection, this mob action, and then once it had cleared, let it move a risk box off the bottom, and it was still going up, so I bought it after it took out that long tail. It felt like now there was something possibly going on. And it turned out, yes, indeed, there was. So that one returned. That's the Coinbase that we know and love. So there's one risk box. That's 1, 2, about 3R. This thing just rocketed straight up. I was only ever going to play one position at a time. It started rolling over. Came below the the previous bar's low, and that looked like a good place to cut it. It then ran straight up, and I just was not emotionally prepared for it or for it to come down. Was not in the zero state on that one, so I just let it go. We're now an hour and a half into the day. This one now starting to feel a little more normal. Here is a RL10 peak and RL10 peak, so that gives you a Kata 2 feeling. The dragon had rolled over. Price had come through a second time, so that felt like it was down. And then the final straw was this collapsing dragon here. So you have this 1, 2, 3 is lower than 1, so I draw the line across at 2, got a bad fill, but standard risk, and down we go. This is now starting to comply with standard patterns. An orderly sell-off to here, and basically finding a turning point and support slightly above this chaos region here. So I was happy to get 1R on that one. And then I'm stalking this for the reversal, because there's still that large upward price action memory, and I'm looking at this descending PSAR. So if this continues to improve, I'd like to see an entry somewhere around in there, and then a standard risk box, something like that. So that's kind of the stalking that I'm doing. A little slower than I liked, but it just meant I got a better entry than I was envisioning. So we have essentially a Kata 2 with a PSAR flip and standard risk box. Looking to see it get up into here. This is the tactical space here. It has to get above this hump to be very interesting. So this little region in here is the tactical trade space. That's where it hasn't proven itself yet on my time frame. It's trying to get started, and I'm trying to get my risk out during that time frame. And that is a standard normal trade inside the tactical space. You know, it tries, it gets well started, then it just can't hang. You give it some time in here, but it starts coming to the edge of the dragon, and you want to lock in a half an R. So like a no lose plus dinner for 2. And then our job is to see, now that it's coming down and testing, where's this RL10 going to revert? If it reverses like this, then we would see this as another Kata 2, and then that would give us some upward bias. And then we would draw the line across the dragon and across the RL10. So any price action that takes out the dragon can be bought, and we would call this little space in here the pocket. And then a breakout above the hump of the dragon, we would call that an emerging dragon. We've also been calling the breakout above the RL10 an emerging dragon, because those two are really kind of the same signal. The dragon turns faster and is lower. The RL10 goes up further. But that is really a resistance zone to me. So whether you take the early or the later one, to me they're both emerging dragons. To front run that, like a 1, 2, 3 entry, that's what I would call buying it in the pocket, and it has to have a higher low in order to justify that. Okay? Never really got the follow through. Starting to fail. I missed. If I was more aggressive, I could have taken this one. Should have exited there. That would have triggered a short on the break of the collapsing. That's a missed opportunity on the short side. If you got that move, you should never lose money on that trade. So there, somewhere in here, there's an exit, or not later than here, but you're still going to get paid. And then I think that was it for the rest of the day. I don't think there was anything else. It just kind of, I felt like it was just oscillating. I missed the long side on that one too. So many opportunities missed on a tradable entity there. I mean, that was a trade that should have scratched. This is a trade that should have paid off. This one probably would have scratched or lost a little bit, but the Kata 2 probably would have paid. But it was getting late in the day, and this felt like it was compressing. I was disappointed that this one didn't go further and that one didn't go further. It felt like all of the energy that was in this did not come over into here, and it felt like it was done on a Friday. It's had an extraordinary week, so maybe they were just getting tired of it. So that was Coinbase. Alcoa. So these are all 3 minutes. Alcoa starts off. I was way slow on this one, monkeying around with U.S. Steel and Coinbase, but big gap down, immediately started reversing up. I couldn't get it until it had moved my risk box off the right about in here. I bought it. It immediately sold off. I took the half-hour loss. Rats. Late entry, early exit, half hour. Again, on this one, I waited for, the high of the day to get eclipsed. This was like a 1, 2, 3 entry also. The PSAR has flipped, so I buy it with the standard risk, and off we go. There's your RL10 wiggle. Note the rising lows. That little positive move makes the RL10 barely wiggle and go. So if you don't get it right here, you can get it right there. Yeah, the new high of the day, my brother. It was just, especially when there's a lot of tactical shenanigans at the open on a Friday after a really good week. There's a lot of gyrations. I just, what's the hurry? Alcoa just would not quit, took the standard exit. This is a, potential short. After that move, I didn't want to be short the strongest stock in the strongest sector. So there's 1 unit of risk. So that's 1, 2, 3, 4, 5 on the first one, and then 6, 7. So that's about 7R. After 7R, I'm not in any kind of hurry to short that one. What I really want to just see is how far down the stack is that RL10 going to come. It could get down this far and start to reverse, and we still have a COTA 2. So I'm just committed to waiting to see, is it going to turn here, turn here, turn here. Even if it came all the way back to here and then started to reverse again, there was a ton of people that bought it right here. So they might buy it right here. So that's what I'm really doing, is I'm giving up the short side in order to be ready for the continuation COTA 2. Check or hold. So that one's about 7. And that's the price of having that strategy. You know, how much did we leave on the table besides pride? Well, a lot of that. Well, there's a risk box. So that would be 1, 2, 3. This would have been a normal exit. So left 3 on the table. But we got this stable move in here. That's the kind of base I like to see. It's holding steady. The RL10 is reversing. The PSAR comes down. Just buy it. And that flip is a perfect risk box. Check or hold. And now my hope is to see it get through, you know, that cluster. That's when it gets interesting again. One R. Missed the short. Felt dumb. And it just really nothing. So we got 7 out of 12 probably. 12 were available. We got -1 on this other one too. So 9 out of 14. Still pretty good efficiency on that one. And that's a 30-cent risk box in Alcoa. Devon Energy. This is one where I was on the front foot. It was a gap down, immediate sell-off, reversed back up, moved a risk box off the open. That's one I got. It came up and failed, so I took one. It then broke above this convincingly with another risk box, so I buy it. For another one. There's a risk box. There's +1. This was one of those. It fell 1R in like 2 bars off of that, so I didn't want to wait to have it come all the way down here. If you just use the trailing stop, you end up getting out at about the same time, but at that moment you don't know that it's going to do that, and I wanted to lock in that much. So we're at about +2. Now what I'm looking for is to see, what does this hold? Is that going to give me some support, in which case I might get a pocket entry or an emerging dragon, or that COTA 2 pattern. And then I got to make a decision. If this fails, am I going to try for a play to here? In the case of energy, yes, because it's been weak. And I'm not afraid of that one because it's got intraday volatility. But it goes to the upside. Take the COTA 2. Take the scratch. Take the COTA 2. Take the scratch. Take the COTA 2. Get paid a fraction to cover the costs. And it's like, okay, I get it. We're done. And that's that. So a couple in Devon. Oops, already did Devon, sorry. Double tapped. Cliff Natural Resources. Did we already do that one? No, that was Coinbase, sorry. All right. Alcoa was the other one. All right, so here's Cliff. So the metals were all jumping today. Standard thing. Had the gap down, reversed, bought the wrist box off the bottom. That one never looked back, and I was willing to hold that during this little piece right here because my stop's going to be right there. It reverses, so I'm just tracking with the PSAR the whole way. It comes down and hits, immediately reverses, gives me the Kata 2 and an emerging dragon, new high of the day, standard wrist box. Up we go. This one was 1 unit of risk. 1, 2, 3. That's about +3. Scratch. I thought hard about the short, but the metals were working today, and just like on, I think it was the Alcoa, and I missed that. I did take the Kata 2 according to plan. Scratch. Kata 2. Scratch. And missed the short. So we'll take a couple home from that one. Oops, I already got that one. Sorry. Tesla. Here, this was the close. This is the gap down. Here's the OR5. I missed the long. If I take that long, I have to get out in here. I did see the short. Took that one. Scratch. Stop and reverse. Scratch, stop and reverse. Missed all kinds of second entries on that one, but the other things are working. So that's a pretty good one. One, two, three, four. Stop and reverse. Standard wrist box. Fraction, short. Probably 2, and then that was into the day, end of the day. So once this thing got rolling, everybody voted downward on it. So it just took, these are not costing you anything. You try it, doesn't work. Try it, doesn't work. Try it. They all look the same. Leaving the station, got paid, nothing, got paid. And then this ends up being close to close, minus 6.7% in Tesla. Standard wrist box of about $5. Okay. Why did I get 2 of those? I don't know. Okay, so those were the sniper trades. Take a look at the fellas today. Constantine, really nice work. He's identifying these resistance levels and support levels. When this he notices that when it comes about halfway back. So this one stops here. He takes it at the PSAR. The first leg is to here. It votes down again, so he's staying with it, and then gets the on the reversal gets 2.8. Now it comes up, and now it starts failing at that halfway mark and rolls over, so he gets the PSAR flip. Here's a little RL10 wiggle for you. Those are potential second and or third positions. Gets a nice rebound and comfortably cashes. So that's about 7.5. Gold spot versus the dollar on 1 minute. So this symbol shows a lot of respect for support and resistance. A lot of times this is getting triggered by those the larger contracts in the metal, and you might even be trading inside the spread, and it's hard to capture that in a contract, but on the on a Wanda, you're actually trading inside the noise of the contract, I think. So there's some nice movements, but what it means is it really respects the support and resistance level. Because, I mean, that's the size of the spread in the gold contract, and that's the same thing, only just went down a half a step, but it's still the same size move. So if you can get the turning point, you can capture that move on the inside there. Let's see, Eugene with Coinbase. My brother asked me about the OR5. Yeah, so the OR5 is nothing more than the opening range 5 minutes. Opening range 5 minutes. And you might do it 3 minute. We've also done it 30 minute. And we've also done 60 minute. Each one of those standard times is geared towards groups of traders that are waiting to get confirmation. Like guys waiting for an hourly chart. You know, what they see is something like the market closed here, and then they're waiting, you know, if this was minute charts, they're waiting to see what the first hour looks like. That all compresses into a candle or a bar that looks like that. So when we're 1 hour into it, the guys who are trading the 1 hour candle say, all right, you had your first hour to create the noise range to just clear the opening hour, to clear the orders from the overnight book. And then conceptually they're saying, all right, now, if it breaks out of that hourly box to the downside, then this tension has resolved and you're starting to see momentum to the downside. Similarly, if it breaks out of that OR opening range 60 to the upside, you're seeing that the chaos has cleared and there's some actual directionality. This is kind of the same idea around the slow frog, which is waiting 60 minutes, or the quick frog, which is waiting 30 minutes. And these 3 minute and 5 minute ranges also show that similar bit of patience. So all you're doing is that you're arbitrarily saying, I'm going to give the opening, you know, from the open, I'm going to give the opening range X minutes. I'm going to pick the high and the low. And then if price is monkeying around and it breaks out, I'm long, breaks down, I'm short. Straightforward. Okay? There are plenty of times that the opening is in the top 10% or the bottom 10% of the daily range. Like today in the S&P, you know, on a daily chart, you know, it had closed on the dailies up into here, and then today was a gap down, and then it just moved up and went. So that's an example of, you know, the market makers and whatnot coming down to run all the stops of everybody that had been making money on the way up, and that were all worried about their positions, and so they all put, stops underneath the various levels. So those are in the book. They see the book. So these guys just gap it down to here, collect all that inventory, and then they just run it right back up into here and go home. Now they own it at the same price that it closed at, but their net price is down here. And then all these guys are irritated, and now they can't wait to get back into this, so there may be some more buying pressure because they feel dumb because their stops got run. That's, if you feel dumb about that, then you're just going to feel dumb. So don't feel dumb. Just put your stop and manage it. So that's what we mean by the OR 3 or 5 or 30 or 60. It's not unusual to see that opening range act as a resistance or support level all day. So if it breaks out and then it comes back and starts reversing like that, that's where you can hit that re-entry because it's finding support at a non-surprising level. So that opening range has power all day. And furthermore, if that fails down through what was the opening range, that's a place where you can act like a collapsing dragon and down it goes. I'd love that trade because it will spend some time trying to get long and it can't, and then it breaks down through that opening chaos. That feels like directionality to the downside. So that's some hybrid trading and advanced day trading course for you right there. All right, so this is Coinbase for Eugene. This is that one where I think I got in on that one. Some of that cow. So he gets the breakout, but it sharply and quickly reverts. So minus 0.25. At one point it was up 1.2. So that move can happen sharply. He lets it find support where it finds support. This is a 1, 2, 3. Buys it. Crushes it. Gets 3.79. I think he gave back an extra 1, so he let it come back 1. And you can see that he's giving it a little bit of wiggle room below. On each close, he's moving it up to within a fraction of the low. And this one, he was tightening it up, went right to the low of the day. This thing closed well and started going, so he brings it up to here. And then this starts reversing and just takes 1R. So that's really good management. This is the reversal through the dragon, through the PSAR, aims for a return to here, kind of just scratches out of that one. Okay, so nice work all the way through. So about 5R on that one. 1.2, or no, I'm sorry, net 3.2. Sorry, my misreading. All right, this is, let's see who this is. Oh, this is Eugene again. He notices the Z3 pinch on the previous day to create his MMR, his floating MMRB, if you will. This is on XOP on the 3-minute. This is oil exploration. Late to the party. This was that gap down and sharp reversal. So that's one of the things that you can do is when you have a MMRB is almost like a frog box or a fractional frog box. You just hang it on the low and it breaks out far enough. You might even be able just to get that right there. You saw me do that with Devin, by the way. Yeah, this PSAR flip. It's uncanny how that's the noise box, whether it's intraday or whether you see it over here. Anyway, so this is one where you could actually get the PSAR flip. You might have also done a 1, 2, 3 entry here or leaving the river. You're not wrong by waiting to see the Z3 and then giving back 1, capturing 2, getting 1.8. And if you don't want 1.8, if you feel regret about missing that, well, you're just going to be sad. So 1.8. Well done. Very measured and structured. All right, this is Paul on the Euro Swiss now. He's going for the Euro Swiss on the 3s. He sees the 1, 2, 3. So this is 1 that peak, swing low. It rolls over, so that makes that a 3. 3 is lower than 1, so that gives you that caught a 2 feel. He gets it here. Standard wrist box there. Collects that one on the little rebound. Why not? Re-enters short. Exits for minus 0.8. Or was this stop and reverse? That may have been a stop and reverse. In any case, this is the loss. Didn't want to chase. A 1, 2, 3 is still okay. At that point, you can then draw this line across and say, when this goes up, hits, holds support at the dragon, and reverses again, you can buy that one. And then you get that nice excursion and immediately starts failing. There's your RL10. Just take it and get paid. Great short. He tries the 1, 2, 3. Quick loss. Quick short. Tries the long. Does get the short. Now, because of a couple, missed, minor losses in there, I think he's quick to take this one. And then get short. Oh, no, I'm sorry. Second entry. My fault. Complete exit. That's a good shot. And then a re-entry was beautiful and gets paid, so 3.5. Yeah, and I don't disagree with that. When you get this one long and you get 1, 2, 3, and then a lower high, and it comes down even to the edge of the dragon, or when it falls out below those, yeah, we might have saved that one. But that's a good stop and reverse, because now you're getting the collapsing dragon effect from here. That's really so good. Woj solving some of his over trading problems here. That is good. Good to see. Nice tight wrist box. Breakout. Gets paid. Opportunity for the second one here. Well, I don't read. That's why I don't read the news. And that's why I trade the PSAR flip. That would have been a good exit for that trade. And then the re-entry here, I like. Good stop and reverse. I might have even tried a second position here, but that's a great exit. I like the discipline of one at a time. You're doing nice on that. And then here's another 1, 2, 3. It's just so good. So 1, it peaks right where it peaked before. So you're not allowed to be surprised at that. That's why that exit is so good. It's failing right where you're expected to fail. And the last time it failed here, it did that. So you don't need to stay longer than that. So that's 1. This is 2. It bottoms out and it rolls over right away. That's 3. 3 is lower than 1. You come across, there's 2. There's your collapsing dragon, crushing it, and captured what was available. So really nice work for 3.2. Aussie, 5 minute. A little choppy. missed one. Dude, stop looking at the news. Are you kidding me? 1, 2, 3, 4. How important is the news to you again? Still got paid. A couple nice, the net positives in here are excellent. So 2.7 for the day. And again, all of this goodness in here more than pays for that. And remember, there's another 4 waiting in there for you. News. Devon Energy. He tried that short stop and reverse. Pays for that one. After the first loss, I might have been a little quicker getting an extra piece on that one. This one could have been bought here instead of there, but good quick scratch, and nothing else happened the rest of the day on that one. And then 3.5 on Tesla. He quickly gets on the right side of the angels. He even got paid on that little piece, and then smashes this thing to the downside for 3.5. Maybe your best day in this last 3 months. Nicely done. Less on the euro dollar. Hardly any movement on this one at all. So this was it was just a grinding day. That's a good shot. Got paid. Good shot. Got paid. So you're getting some money here. Scratch. Fractional loss. Just not much there. Good day to call it a day. There just was no movement. The amplitude was just not there. Not enough room to trade. All right, now we'll put this week to bed and open her up for the weekend report. Weekend report for 6 August. We moved from bearish normal to bearish quiet, the least common market condition of all, and is quite often followed by moving into sideways quiet and then up into bullish territory. So that's a nice way to get out. It starts off bearish and horrible, bearish, volatile, then that quiets down, becomes the new normal, and then just the absence of fear, then it starts climbing the ladder this way. That's not an unusual pattern. We're within 2.5% of sideways. The ADX is getting stronger on the bull side. Risk Z is still telling us risk on, risk up. We're still at 40% exposed on ETF2, no change there. The leading symbols in the ETF 13 is all US. Still some residual strength in energy. Monthly market health check. This is actually showing some signs of healing right here. Like a 1, 2, this is a 1, 2, 3 pattern to the upside with the top of the dragon, PSAR, and then peak RL30 in target. The size of that move is like the size of the COVID fail. So, it's hard to see the economic news that pulls it back up other than just the sudden cessation of great pain. And they keep printing trillions of dollars and flooding the market. I mean, the senators got to have something that's going up so they can buy it. The 9-day, you see that leg 1, pause. Leg 2 was brutal. And that little recovery's been nice. It gets us right to the edge of the piece of the 9-day is ready for a PSAR flip. The weekly showing nice strength. You can see the when you translate our daily frames, that's our 30-day, like a 6-week. Here's the 150-day or 30-week. These were those two little support and resistance levels we're trying to break through. Here's the next intermediate targets on the way to the all-time high. That's your price ladder to the upside from weeklies. This is a tradable time frame. When you take a look at weekly bars, you can see real clear turning points and places for Kata 2. You can see collapsing dragons all over the place. And that feels like an SSC on a weekly basis. That's the beginning of hope. 3 days, same. The 30, so support levels, double bottom, higher low, SSC. If this breaks above this price level, that's going to go. That's the pause that refreshes. It did not fail. So it's holding on to those gains. ETF blended monthly rebalancing portfolios. All U.S. plus real estate. The Russell, the Qs, mid caps, large caps, Dow, and real estate, all above their 4-month moving average. The two speculative ones, the Russell and tech. That's people buying risk on in the U.S. Add the XL series, so then you get utilities and healthcare. Their residual strength is what makes them the leaders, but they didn't have much follow through this week. The shift is away from defense and towards growth. So you see tech and mid caps on, and you see the cyclic nature of energy. That's why you got to make money in energy while it's in your favor. That's not a just long-term buy and forget. You got to play that one as the cyclic sector that it is. Clean energy as the alternative. I mean, more and more people got to believe, even if it's just for political reasons, why you got to have that. This was trading last year at 130, so this has still got plenty of room to go. And this is a commitment from political money to tax us to buy those. And again, senators got to earn their money. Brazil trying to make a nice little recovery off the bottom. Keep that one in mind. That's a stealth trade right there. In the Dow, Procter and American Express finally showing some strength. Home Depot, I think you got to like that. That feels pretty good. 3M in the industrials. Honeywell hasn't really rejoined. It had a nice month, but flat this week. That's one to watch. Still, Boeing is a defensive play. Market radar. So the U.S. has recovered from it was all yellow last week. This was a nice week for the U.S. Small caps starting. That's IWM right in there, getting it done. The 4 U.S. indexes, which is why we're at 40%. The 6 internationals, which is why we're at 60% cash, because they're all in cash. The S&P at 43 is better than the Euro-Asia blend at 32. Tech and the mid-caps are the strongest. Looking good for the U.S. right now. Deserves more attention. Green and white. Was good, now great. We must be ready to exploit new strength. Why? Because they're new leaders. Same thing with iShares preferred stocks. That's a safe way to play a protected stock segment. And look at the Russell growth. That's green and yellow. You didn't even see that. That happens so rarely. That's how strong that sudden surge has been. It's green and yellow. Things that are starting to weaken are white and green. White and green, and that's your short-term treasuries, right? And bonds. So that's a shift to growth on. Absolutely clear. You can't hide that. Tradables, volatile ATR, and they're on the list for large daily dollar volume. This is the top 30. So, energy, biotech, it's knocking on the door, trying to tell you something. Semis, oil exploration, and gold miners. I just got to show you something here. A couple years ago, it was not unusual to see the S&P daily dollars be 10 times the size of the Qs. The Qs have really become a retail trade of choice. There's a lot of new trading money chasing the heck out of that. Unskilled labor. Daily report. We'd already seen the sniper trade of the day before, so I'm not going to hit that again. Slight warning on the two strong sectors. Just a reminder how quickly the worm can turn, but it is bearish quiet, reasonable improvement on our short-term strength, and the longer terms are improving also. Home Depot, Microsoft, American Express look good. Tesla's little sell-off today was hurtful. Pfizer still recovering from bad earnings. Or worried that that money's going to get clawed back, more likely. A sense of outrage among the people. The Dow 30, plenty of dojis. One warning in 3M. Half a dozen auto framers. No breakouts on today's quiet little... it was tidying up today. That's what it was doing. ETFs were a little more volatile. Still have a couple in here that tested out well for auto framer. But you had breakouts in clean energy, Latin America, and small caps. And in Brazil. I'd really pay attention to Brazil. And metals and mining on the strength in the steel companies. Tactical trade. Auto framer standard. Reasonable number of squeezes given the small range for today. Boeing had a good week, and it's still squeezing tight. I like Caterpillar, Healthcare, and Walmart as tightly compressed, ready to run. The S&P and the Dow are pretty squoze, not quite 2-to-1, but they're near the top of the stack. You like that? Today, Tesla moved much further down the stack because of that harsher sell-off. And Brazil just had a large day altogether. Sniper Headquarters, starting with Godzilla. None in our tactical symbol set. Newmont is still on there. I like that Intel is on and very, very quiet. DXC and SEE. I like the volatility. So they should be on your short list. Lots of fireworks. That nice little run up. You know, we had we've had Akata 2 and then 2.5 legs up. That puts you into a lot of fireworks near the top of the stack. And they're holding on to it. They did not experience selling pain. So that's why their 5-day range and most of their 1-day range is so quiet. That's a very good sign. It's retaining that strength. The fence sitters, mostly quiet. Devon Energy had a move today that was just slightly larger than normal on a range day, so there was activity inside the company. Now we're starting to see on the volatiles for the S&P a little bit of divergence. Extremely volatile 5-day, extremely quiet 1-day. So that divergence matters to me. This Monster.com looks like a continuation play. It's been large 5 days and large 1 day. Same in here. So I look for the divergences. Green and red are the ones that are interesting to me. And then very few of the quiet ones had any kind of move. Standard sniper stats there. And the index statistics for our tactical set. Robinhood and Coinbase remain very interesting, very tradable. XBI and Devon Energy started making their moves today. There's much more to come on that. Squarespace had a down day on some earnings problems. Got smashed, and XOP just starting its move. That's the divergence you want to see. Marijuana maybe has bottomed, is starting to climb back out, and then Alcoa just crushed today. So all of those that I've circled in green should be on your short list. Marijuana, Alcoa, oil exploration, Squarespace, energy, the biotech sector, and Coinbase. That's a half a dozen symbols, much more likely than normal to pop on Monday. All right, I think that's everything I want to talk about. Yeah, that's enough for tonight. All right, guys, good work. We'll get ready for tomorrow night's podcast. We got another late soccer match tomorrow night, so if Ken H gets those posted early, I will record it before we head off to soccer. Otherwise, it'll come in a little later tomorrow night. True Storytelling Circle in the morning. I'm going to start adding a Q&A session for foundations traders. We had a couple folks taking the self-paced course, and they had some individual questions, so I'm going to put the word out to those folks that I'll be collecting Q&As, and I'll start answering those on weekends in a consolidated recorded format, and then adding that to the foundations course. There's a lesson placeholder in there. Those turn out to be pretty popular. Gives you a chance to get your direct questions answered if you're a foundations course student. All right, that's everything I got for you. Get that published and posted, and see you tomorrow.